created videos for buyers of homes in general, but for first-time home buyers, because you haven't done it before, there's lots of nuances and terminology and concepts that are new in the process. So I'm going to cover 10 things today that you need to know as a first-time home buyer of a property, because you don't know what you don't know. Let's go. I connect with people just like you every day to help them discover where to live and invest in real estate and sell property for top dollar when that time comes and it's just right for you. My name is Leif Jacobson. I'm an ex-cop turned realtor, also known as Safe Leif. If you're new to this channel, subscribe so you're first to learn about Colorado real estate. My contact information is below and I'm super excited to hear from you. So reach out by text, call, or email after this video. I'd love to connect with you or book a calendar appointment and I'll reach out to you, whatever works best for you. So today we're covering 10 things that it's imperative for first-time homebuyers to know when gearing up for the process of purchasing property. It's one of the biggest purchases of most of our lifetimes for the vast majority of us, and I want to help you prepare in various ways for 10 things. The first thing we'll talk about is financial preparation, and your credit score is a huge component of that. So your FICA credit score is monitored by 3 agencies in the United States, and it gives a quick picture in a number. I'm sure you know the term credit score, but basically it gives a quick picture by dozens of criteria as far as your debt to income ratios, your payment history, your ability to be responsible financially is what it's intended to do. It doesn't always capture that because it can't capture every component or every transaction. But in general, it assigns a number that basically is one quantifiable number that outlines or is meant to depict your financial ability to purchase property. And there are numerous things that factor into creating that credit score number. And it's important that you dial your credit in. It takes years generally in order to build credit. And there's some nuances. There's credit repair agencies and consulting agencies that help you just dial in very specific things to do and not do that will maximize your credit score and get you to a place where you want the highest number possible. The thresholds are a credit score of 620 is typically, and credit scores go all the way up to 850, by the way. So that's the top threshold. I've never even met anybody who has an 850 credit score, but that's as high as the number goes. So 620 is a credit score that vast majority of lenders can authorize to lend money to a borrower as far as obtaining a mortgage loan to purchase property, unless you're paying cash. So as long as you're taking out a loan, you're working on that credit score in order to qualify to purchase property. So the bottom line, for a loan in order to then purchase property. So 620 is generally the minimum credit score. Some lenders will go as low as 600. Exceptional programs and only various programs will go as low as 580. It's very rare for a lender, and I'm not a lender, so I'm staying in my lane as a realtor, but I do know something about credit because I work with lenders all the time. It's extremely rare for a lender to be able to lend on a mortgage loan for folks with a credit score lower than 580. Once you get above 620, there are thresholds of about 40 points, over that. So 660, 700, 740 are different thresholds. And basically, the general premise is the higher your credit score, the better rate and terms that you can get on a loan. So it's not just a pass or fail. It's not just you get the loan or you don't. It's what grade of a loan that you get and the terms and the interest rate, which determines typically for a 30-year loan, that can make a massive difference to the tune of 50 or hundreds of thousands of dollars in the amount of interest you pay, depending on what type of interest rate you get. So the top threshold generally is not 850 though. It's important to understand that if your credit score is 720, is 740 or above, your rate doesn't get any better. So basically you get the best rate with vast majority of lenders. If you're over 720 on your credit score, you get as good of a rate. It doesn't benefit you to have a 790 or an 840 credit. You really get the best rate if you're in that pocket of 720 or above. So if there was kind of an optimal goal, you don't need to try to get up to 800. If you're 720, you're pretty much golden as far as getting the best rates for a vast majority of loan programs. The other part of financial preparation is down payment, cash availability, and funding funds in order to obtain the loan. It costs money to obtain a loan. And then kind of margin and emergency funds. So the down payment against the loans, typically 3.5% down for some government funded or insured loans. You can do as low as 3.5%. Sometimes you can do a 0% down. That's not as common. Typically with an FHA or a couple of the programs we can talk about, you can do a 3.5% down. 5% would be more common. And once you get above 5, 10 or 20%, you're into a conventional mortgage loan. And I'll let a lender speak to all the nuances of that. I'll just kind of give you the 40,000-foot view as far as cash preparation necessary. So generally you want to have minimum 3.5% down as a first-time home buyer. You're not pulling equity generally from another real estate investment, short of getting a gift or having someone help you out in some way. None of us have a huge amount of cash typically, unless we save up for a long period of time or we receive an inheritance or a gift. Generally, most of us don't have a ton of cash down. So you can do loans with as low as 3.5% down for your first time loan. So that would be the cash necessary is 3.5% to set aside in order to obtain the loan or obtain the down payment. And then you need to pay for the loan itself. It costs money to borrow money. So the mortgage itself, depending on your location, your state you're in, I'm licensed in Colorado and Florida, and the closing costs for loans vary greatly between them. You can be up into $15,000 or $20,000 just to obtain the loan in Florida. Colorado is a little better rates. You're more in the $6,000, $7,000, $8,000, $9,000 range as far as closing costs for the loan. So there's the down payment, there's the closing costs, and then it's important to have a margin of cash to purchase a place, because generally places need some upkeep. Not every place has been maintained very well, and so you may have some incidental costs and even just moving costs. If you've never moved before, again, we're talking first-time home buyers here, so things to be aware of as far as moving costs. Interstate moves, even if you're just renting a truck and loading it yourself, loading and unloading, it can be thousands of dollars to move interstate. Trucks are very expensive, picking them up in one location, dropping them off in another. And even if you're just moving locally, it's hundreds of dollars for a truck and lots of components needed. If you're hiring a moving service, there's no question it ramps up very quickly. You can pay tens of thousands of dollars for interstate moves or more with moving companies. And that would be kind of a starting or an entry-level basis. So there's no question that there's plenty of cash preparation, and cash is king. We've all heard that term. That's definitely the case when you're moving, because especially once you're in the process, if you don't have the cash, you're putting things on a credit card or borrowing money or taking out another loan in order to effectively manage and accomplish the move in a process where there's lots of momentum and you're already in it. I mean, you're not going to stop halfway through generally, or 3/4 of the way through, and there are unforeseen costs to the tune of thousands of dollars. So cash preparation is vital to have some good margin and bandwidth in order to financially prepare for and handle the move. And there's always things that don't come up in general. The second thing we'll cover is the cost of home ownership in general. When you're renting property, obviously, the landlord is taking care of even the long-term or short-term maintenance issues in general. You're not having to do that. When you own property, it's all you. So the benefit is that you own the property and you're gaining the equity and taking the risk of purchasing the property. You're gaining equity and interest in that property as you go along as far as a financial benefit. And the bad news is that you need to be maintaining that property. There's no landlord to obtain the property. You're basically your own landlord obtaining a mortgage loan in order to get the property yourself. So maintenance long-term is up to you, and it's to your benefit to stay on top of those things. When people come in, because you'll sell it one day, whether that's 30 years from now or 2 years from now, you'll sell that property one day. And one of the first things that people come in and look at, and that I coach my clients on the buying side to come in and look at, and we'll look at the same thing for you as a buyer, is how well has this house been maintained? Has there been love and care put into the fine details? And that gets you more money in the end, because the better a property has been maintained, the more money the seller will be able to get when they go to sell it. So you want to be that guy or gal when you go to sell one day, because prospect buyers will come in and see that you've maintained it well over the years, and they'll be willing to pay top dollar or more money than you would have gotten for that property. So it takes money to make money, and it takes money to maintain a property appropriately over time. So you need to prepare well for the costs of home ownership and maintenance as you go along. On that same line, you need to prepare a buffer for emergency or unforeseen expenses. Just like all of life, homeownership is the same way. You can't know when the system's going to go out. An HVAC system can be $7,000 or $9,000, just like that. The moment they go out, and you have to have heat, you have to have cooling. If you're in a hot or cold or both type of environments like Colorado, where it gets both, it's really imperative that you have both. So all that is to say, there are unforeseen costs in homeownership and lots of systems. A plumbing issue, water damage, anything can happen in a house as far as the systems, and it's important to prepare well for that. So hedge on that when you prepare for homeownership as far as financial preparation, so you can handle things as they come up. It's good to have a fund in your budget. If you have a budget, I highly encourage you to create a budget and have a line item specifically for unforeseen home maintenance or property maintenance issues that pop up. The third thing we'll talk about is location and selection of where you want to live. It is vital to consider things like your neighborhood and amenities and the area of town, how far the resources are that you want access to, and things like safety and crime rate and schools are very important to people as far as a general consideration. So there's lots of factors to think of when you're thinking about what's going to work well for you individually, for your family, for your spouse, your boyfriend, your girlfriend, your kids if you have them, and all those factors as far as what's going to serve you well individually or as a family. So be thinking of and research carefully all those resources. Where are kids going to go to school? What do the crime rates look like? Am I going to feel safe in a specific neighborhood? There are neighborhoods with HOAs, which are homeowners associations. Those are neighborhoods with rules and regulations that keep a neighborhood feeling and looking and appealing in a certain way. Like you can't park junk cars in your yard, you can't run a business out of your house, all the way down to fine details like we're gonna tell you, the HOA will tell you what color to paint your front door or your house or your trim. You can't just do anything you want to a property. You may want to put a shed in your backyard, and there may be rules reference whether you can put a shed in or not. So some people love homeowners associations, some people hate homeowners associations. It all depends on, neither of them are right or wrong. And it all depends on what you're looking to do with that property and what you're going to use it for yourself. So be hyper aware of those. Define your must-have or essential characteristics for a property, and then also your desires, and kind of grade those. A very strong desire is different than a medium desire versus like, it would be nice, but it's not a huge deal either way. So that's how I kind of categorize and help buyers categorize things is, hey, here's a make or break. Look at this, it has a fireplace, I'm out. Now, but a thing like a fireplace, it's important to remember with stuff like that, you can add fireplaces. Like if you find a house that is just flawless, it's a great property, it's a great structure, it's a great house for you, and the only thing it's perfect other than not having perfect. There's no real perfect property. But if it is pretty much ideal and it just doesn't have something like a fireplace or an air conditioning system, it's thousands of dollars to install one of those, but it is doable. So I usually don't search by criteria for people, because we might find a place that's ideal, and for a few $1,000s, you can add the one component that it's missing that might be ideal in every other way for your life. So don't chalk things off too quickly if it doesn't have those things, and think outside the box enough in order to think about installing something like that so it'll have all the components that you need. I would urge you not to rush this process. This home selling market in the United States has been ongoing for a couple hundred years, and you're coming in the middle of the process. It's easy to feel like there's a rush or a pressure to find something. Now, if you have there may be more components as far as your job, personal, family, a move, depending on where you're coming from in order to buy. There can be lots of moving parts, but I encourage you to try to not be in a place where there's a rush or pressure to make a fast decision. We want the right property for you. We want the right thing, basically, not necessarily a fast thing. That is the highest priority, is making sure the last thing that we want to do is get you into a property and purchase a property only to have you move in and say, this is not going to work for me or my family. We don't want that for you. You don't want that for yourself, and it puts you in a horrible position. So take the time, write down an analysis of pros and cons, good and bad, absolutes, and the graded desires of what you're looking for in a property, so you can, and we can, search together in order to find a property that's just right and fits your needs, goals, and priorities. It's worth taking that time. The fourth thing we'll talk about is having professional guidance, and that's where I come in. I am a full-time realtor. I do this for a living, and I'm pretty astute. I don't claim to know everything. I certainly don't, and I'm not perfect. I'm human, but I have a lot of prowess in what I do. I have all the integrity in the world in what I do. I serve people wholeheartedly in helping them find property and working with them, making it all about them and not making it about me. Some people hire realtors and it's kind of all about the high commission, and I tell people all the time, I'm not a three-piece suit and a Mercedes kind of realtor. I drive a truck. I'm super down to earth. I'm a hugger. I'm a connector. I'm very relational with people, and I'm all about serving them wholeheartedly. So find a realtor. If it's not me, that's fine. If you want to work with me, I would love to, as far as serving you in a way with excellence, with integrity, and making the process all about you and your needs, not about me, because this isn't my property. I'm not going to live there, and I'm not going to make the payment on the property. It's all you, and it's all about you in this process. The other component we've touched on already is, as far as professional guidance, is a mortgage lender and maybe a financial advisor. If you utilize a financial advisor or have other investments, and it's good to have somebody look at the kind of the 40,000-foot view of your finances in order to determine whether it's the right time. Sometimes buying a house is the right thing at the wrong time. And so it's helpful to have a third party who's impartial, who is not kind of bound emotionally to the situation and has different goals than you and is not in the process. They can look from outside the process to help you understand whether the right timing is for you to buy property or not. Hopefully it is. Would love to do that with you, but it's worth having a third party take a look from the outside at your financial situation and say, hey, is this the right time? Sometimes things are the right thing at the wrong time. The third area of professional guidance is having a fabulous home inspector. There's no question that you and I can walk through a house and see imperfections and issues and maintenance, like we talked about, that maybe hasn't been performed well over time. But an inspector who does that for a living can see dozens or hundreds of things that you or I cannot see or won't see. So the inspection process is for you to inspect a house top to bottom and a property in a neighborhood. It's not even just about the house. It's the whole big picture of where the house is located and whether you want to live there. So it's your opportunity to inspect the property thoroughly, but a professional inspector could come in and see and do a deep dive, from the tip of the roof into the foundation underneath the ground. For most houses, inspectors will look at small nuances of things. They have a protocol that's usually hundreds of things that they're going through. They take pictures. Good inspectors take pictures, video, and make very thorough notes and provide kind of levels of warning as far as urgent issues that really need attention right away, or things in their book that might be a make or break issue or cause grave concern as far as whether you want to buy the property or not. If you come in and there's a property that has a foundation or structural issue, or it looks like that, and it may be a $120,000 fix on the foundation, you need to know about that up front. And you may not have caught that. I may not have caught that. I'm not a structural engineer or a building inspector. So neither of us might have caught that up front without having a professional involved in order to spot some of those nuances. So for a few $100s, it is well worth hiring a professional inspector to inspect the property. Now they're human as well. It doesn't mean an inspector can't miss things also, but it's far a greater chance that they'll catch things rather than you and I just doing our inspection, because that's, again, what they do for a living. I work with fabulous high integrity inspectors. It's also important to work with an inspector that is super level-headed. Some inspectors make kind of a mountain out of a molehill. Some inspectors will blow issues up unnecessarily in a realm that blows things out of proportion a little bit, in my opinion. And I work with inspectors who are observant and careful and cautious and studious in their documentation, but also don't blow things up to a place that may affect the deal or your ability to buy the property if it's not warranted or it's just not a big deal. So it's not black or white. Some things are massive issues and cause for grave concern. Other things are smaller issues that are okay to kind of move through. And inspections are all about going through the process with eyes wide open. So it's all about awareness. It's all about communication. And for the inspector, it's all about liability as well. They have insurance that they have as a business, and they can get in trouble if they miss something or don't spot something that's a significant issue as well. So it's all a team play. We're all trying to bring you resources so you can go eyes wide open into a purchase and not have things come after the fact or minimize the chance that things will come after the fact that you were not aware of or not able to kind of negotiate or mitigate as far as issues. The fifth thing to be aware of is negotiation when we're making offers. This is a process that I love, and that's part of the reason I'm a realtor, is as an ex-police officer and professional negotiator, I dive into this process and negotiate for you on your behalf as your fiduciary, which is the highest level of advocacy and confidentiality, serving your best interest to make sure we get you the best price and the best value on the property. So the negotiation process is best done, in my opinion, and this is how I roll in business, is best done as a win-win scenario. I don't do win-lose negotiation. My goal is not to have you win and have the other parties lose in a transaction. My goal is to have you win, and I'm advocating for you and representing you explicitly, but also to have the other party get their needs met. That's good negotiation. It's good in police work, it's good in real estate, it's good in every type of negotiation that I'm aware of. Pretty well read and studied on that. Several philosophies out there that advocate for a win-win negotiation scenario. So that doesn't mean we kowtow to everything the other party wants. It means in negotiation, it's a give and take and a communication process. And people can sense the energy, they can sense your heart, they can sense your emotions in the negotiation process. And that's where I advocate for you as a realtor. Because not a lot of agents, well, there's many agents that don't come with a win-win scenario and energy in mind. They're all about the win-lose, and the other party can feel that, they can sense that, and it makes negotiation extremely difficult and not as advantageous for you. So I go in trying to understand the other party's needs, first trying to understand your needs, of course, but I also then dig deep and ask very specific questions to understand the other party's needs, so we can come in and craft an offer. I craft offers. We don't just put stuff on paper. You know, the offer price is only one component of an offer. There are dozens of other components that will make an offer desirable for a selling party. You're the buyer of the property, there's the seller, and they have issues in their own life just like you. They have emotions, they have priorities, there's lots of moving parts in a transaction. There's a reason or dozens of reasons that they're selling this house. And it doesn't, usually not that the house is bad or necessarily doesn't even work for them. You know, they're PCSing with the military, they're moving to be closer to kids or grandkids or closer to parents. There are dozens and dozens of reasons that people are selling property. So my goal is to figure out what they're trying to accomplish, where the crux or the pinch is as far as their concerns and their fears and their priorities. And then we craft an offer that speaks specifically to alleviating those fears or those kind of the pinch in their situation. So we're going to craft an offer that makes it super desirable for them in terms that work for them and as seamless as possible to make their life as easy as possible, while also accomplishing those same things for you. So the goal is to make it as seamless and effortless as possible for you and for the other party, and then everybody wins in the transaction. And man, when we can put those components together, which is always my goal, it is so different than a win-lose situation where one party wins and the other loses. And basically both parties rarely come on top with that because it doesn't go well for people in transactions when that is the kind of the energy or the motivation in a transaction. Contingencies is the other factor to understand when we're talking about negotiating and making offers. So there are many contingencies when you make an offer, and we include those in the offer coming forward. An offer is something that I prepare for you. It's a document that I prepare for you that outlines the time frame to close, all of the components and things that you are offering as far as coming forward to purchase a property. And the contingencies, there are a number of contingencies that are built into the process, and that's a state document, prepared by state attorneys as far as the offer that we'll put forward. And the contingencies are designed to protect you with different thresholds, with different dates and different time frames, to protect you, having several contingencies built in that allow you to back out if something becomes prohibitive or not in your best interest as far as moving forward with the purchase of this property. So once a seller signs an offer, they are obligated to sell the property. They can't back out later. They can't just decide a week or two from now that they don't want to sell it to you. They're obligated to sell it to you. They have to, by law, sell you that property once they sign an offer to sell. in vast majority of states, and especially Colorado and Florida where I'm licensed. That's definitely the case in both. But the difference with contingencies is you as the buyer have the ability to decide at several different thresholds with different topics whether you want to move forward with that purchase or not, based on information that you're receiving as we go through that process. So there's the inspection contingency, and that is the most kind of liberal or subjective contingency, where you decide not just the house itself, but you're looking at the neighborhood, the surroundings, the exterior of the structure, the interior of the structure, the property itself, where it's located. You decide as we go through the process. The best thing is to do is to decide up front before we make an offer. But even during the process, if you come up with new information that you weren't aware of beforehand that makes it not advantageous for you to purchase or an appropriate investment for you to purchase that property, the contingency is you can then back out, and we can articulate that and say, look, we can negotiate that first and say, hey, this has come up. We'd like to remedy this and we'd like to address this, or we may not have this client purchase the property. So there are inspection objections where you can come forward. That's where you're saying after the inspection process, hey, we've come up with these few things that are, we're not going to ask for everything to be fixed. There's often dozens of tiny little maintenance issues that come up throughout the process. But if there's a bigger ticket item, the things like, a roof or, a window leaking or, a foundation issue or one of the systems of the house, the HVAC system, or which is the heating and cooling, or the plumbing system. If there's an issue there, we are in negotiation process and we can ask for that to be fixed. That would be called an objection. As far as coming forward and asking a seller, hey, I want to buy this house in good faith, but I can't afford to fix this myself, and I need you to address this in order for me to accomplish the process of purchasing this property. So that's the inspection process. There's plenty more components to it, but there's the objection, ability to make objections throughout the inspection process, and also the ability to terminate the contract if something massive or prohibitive comes up. Like we talked about earlier, if there's a massive foundation issue or something that's tens or hundreds of thousands of dollars, that may just be necessary. And not all sellers are willing to remedy those or address those, especially when they're up in that realm. And it may be necessary to terminate the contract and not purchase the property because of something massive that comes up. And so there's a termination contingency. There's other contingencies as you go along, including appraisal, the valuation of the property, where a lender hires a third-party appraiser to make sure that they're not loaning more money than a property is worth. And that's the purpose of the appraisal. It's an opinion of value from an appraiser who is a certified appraisal specialist who is valuating the property to kind of ascertain its value. And there's other contingencies as well throughout the process, other safety contingencies and insurance. Make sure you can get insurance and obtain homeowners insurance, which is a good idea to have, but also required by any mortgage company. You are required to have insurance on a property. So all those contingencies are different thresholds and different time frames from the moment you offer to take us through typically a 30-day process from an accepted offer to the moment of closing, sometimes 45 days, sometimes that can be accomplished in 15 days, but generally that's a 1-month process. And there are numerous dates and contingencies in there that allow you to get the maximum amount of information that we can't necessarily all get up front, including the inspection process, in order to decide throughout the process if you want to move forward or not move forward on that purchase. If you decide to terminate the contract because of a contingency and taking advantage of that during the process, then the earnest money that you put forward, which is the deposit, that's the first thing that's required when you go into contract, would be typically a 1% deposit against the purchase price. That is a refundable deposit based on those contingencies. So if you then terminate the contract based on a contingency, it's my job to advocate for you and make sure that you have the maximum chance of getting your money back, because it's many thousands of dollars typically for earnest money coming forward. So we want to make sure that you can get that money back so you're not out any more financial resources if you're not going to move forward on purchasing a house. The sixth thing we want to cover is paperwork and contracts. It is important to understand, like I already alluded to, that I'm preparing contracts for you. Technically, these are your contracts along with my brokerage that we are preparing for you. It's important to understand what you're signing before you sign it. Not everybody reads every word of every document, and that's totally understandable. I have done many transactions throughout my life personally. I don't always read every word of every document, but it's important that you are doing that to a level that you're comfortable with. Don't just trust me putting stuff forward. I'm trustworthy and I know that, but I'm asking you not to just trust me or another realtor if you choose to work with somebody else. It is vital that you understand what you're signing before you sign it. So take the time to read through those documents and understand that your realtor is preparing those for you and to represent your best interest. But in the end, that's your document and you're putting your signature on it, i.e. you are the one that's obliged or have the obligation to follow through with the contract. It's very important to understand what you're signing, why you're signing it, and that the right components are in the contract, both proactively as well as defensively to protect you as well. Keep copies of paperwork and contracts. That is a really important point as well, and it's all the easier to do these days because generally this process is paperless nowadays. As far as all the documents that we sign will come electronically via email. It's a couple quick clicks as far as signatures, and then in the end you can get either a packet about this thick that's all your closing documents when a mortgage is involved. That's the bulk of that paper upon closing on the purchase of the property. You can get those in paper form, and or you can have the title company send those to you in the end, so you'll have them electronically. Most people just do that electronically and have the electronic archive. Some people want the paper version now, and you can put those in a safe or retain that paperwork otherwise. It's not a bad idea to do both, to have physical copies as well as an electronic copy of the paperwork. The last point, reference paperwork and contracts, is seeking legal advice if you have questions or concerns or any doubts as you go along. Again, I'm your fiduciary as your realtor. It is my job to represent your best interest and with honesty and integrity at the utmost level. However, if you see something in the contract that you have a question about, I can help understand some concepts as far as the contracts, but if you get to a point where you feel you need to have another third party look at that, there's nothing wrong with obtaining your own legal advice from an attorney or a lawyer as far as reviewing contracts before you sign them. So advocate for yourself and represent your own best interest that way for sure. Home inspection and appraisal process is the seventh thing we'll cover here. As we've talked about a little bit, I've kind of alluded and back and forth with each of those. I highly recommend that you attend the inspection of the property yourself in person and ask lots of questions of the inspector. That's part of their job, is to look at all the nuances of the property and things that may or may not have been maintained well over time, and also answer your questions and concerns you have. And they're human as well. Inspectors are not flawless human beings. You might spot something that they didn't even spot. That happens once in a while, as far as just being down to earth. And once in a while you can point out something that they didn't even catch. So, and they can often walk you through at the end. They have such a broad knowledge of structures and properties and improvements to the property that they can often walk you through and help you understand, how to turn on or off or engage an irrigation system, a sprinkler system, or a plumbing or a wiring issue, things like that. So they can often help you understand some nuances that you might have not known yourself. Once in a while, something will come up like a foundation issue, like I talked about earlier, where if a foundation issue comes up or a concern, a general building inspector is not necessarily, vast majority of the time, they are not a certified structural engineer. So they may see a couple cracks in the foundation underneath the house or along the side of the house on the outside, and they may express a concern there and recommend that you have a structural engineer come and take a look. So sometimes you'll need to have additional companies, from structural engineer to plumbers or HVAC, electrical technicians and other people to come and inspect something if there's wiring that's out of whack, if there's a plumbing a leak or a drainage issue, or even outside the foundation as far as a structural engineer. Sometimes there's drainage or slope issues that come into the house. It's going to cause hydrological or water issues or pressure against the foundation of the house. So sometimes the general building inspector will also highly recommend that you consult another type of inspector. So sometimes the inspection process needs to involve additional types of inspection companies. It's important to understand the appraisal process, like we talked about earlier as well. The appraiser is hired by the mortgage company to evaluate the property. They have access to the same data that I have as far as the MLS, the multiple listing service, which advertises properties that are for sale, but also kind of categorizes and catalogs properties that have already sold. So the historical data in an MLS is just as important as the actively for sale data. It covers two different functions. So it's great in order to Zillow and Realtor.com all pull their information from multiple listing services, from MLSs. That's where they get the data as far as houses that are for sale. But we want to go back and look at that historical data. It's vital to be able to pull historical data and see within a certain radius how much houses have sold for. When we're looking at the value of a property or ascertaining the value, we want to analyze what it's worth. And what it's worth is what not someone is even willing to pay, but what people have already paid for property, typically within a 1 mile radius within the last 6 months, give or take a couple few hundred square feet, with a similar number of bedrooms, similar number of bathrooms, and some similar characteristics as far as, a ranch style or a rambler style, depending on where you are, would be a single level home. You can have a multi-level home or multiple split levels. You've heard of split level houses where there's half stairs that go up and down. So all those things we plug into the system and look within a radius, within a time frame, to see how much other people have paid for property. So I have access to that data. I can do what's called a CMA, a comparative market analysis, to help you understand what property is worth. And that's very similar to what an appraisal is, but an appraisal is a different level prepared by a certified appraiser, and that can be used with similar data. That report can be used in a financial institution like a bank or a mortgage company to analyze what the property is worth and be certified in a financial transaction like that. So that's the difference with an appraisal. Is a CMA that I prepare cannot be used in a financial transaction or in that capacity, but a full appraisal by a certified appraiser can be used and to justify the purchase through a mortgage or financial institution. The eighth thing we'll cover are homeownership responsibilities. We talked about homeownership financial responsibilities earlier, but homeowner responsibilities like staying informed about homeowners association rules and fees if applicable. If you have rules and regulations as far as where you live, it's important to stay up on those and stay involved in those, especially because you might have a say in the fees that are associated long-term with those. So I would encourage people to get involved and stay involved as far as potentially even being on a board for your neighborhood. If that's applicable, it's important to be involved in those so you have a say. Kind of like voting in the United States, you can't complain if you weren't a part of the process or didn't cast your vote. Understanding your mortgage terms and making timely payments may seem very straightforward and obvious, but some people get in trouble with that once in a while. So it's your responsibility, of course, to make sure that your property taxes are paid, make sure your mortgage is paid, to make sure you're staying up on your homeowner's insurance, which is typically required by your mortgage loan entity, like we talked about earlier. There's plenty of responsibilities in addition to, like we talked about as well, maintaining the home and maintaining the property over time to make sure that you maximize its value, because it'll sell one day. Even if you die and someone else sells it for you, it's gonna sell. So it is inevitable that it's going to change hands one day. It's just a matter of what the condition of the house is at that time. So it's important that you stay engaged with all that stuff. The ninth thing we'll cover is the closing process. Once we've been under contract for about 30 days, like we talked about, that comes down to the actual closing. And it's important to review all of the documentation, to stay engaged with your realtor, and make sure that you're aware in the process, which is my job explicitly during the process, is to be very proactive and making sure that you're aware and go into the whole process eyes wide open in the end. So the goal is, upon closing, there are no surprises. The goal is that you've been informed all the way along and that closing happens seamlessly and ahead of time. I don't operate in chaos. I don't like operating in chaos or respect people who, in general, who choose to operate in chaos. everything possible that we can do beforehand, I do beforehand. I'm not a procrastinator. I'm extremely intentional and have good preparation and intentionality to be on top of processes before it comes down to it. So all that is to say, closing day should be no stress. It should be super calm and collected, and it shouldn't be any surprises. If we've done our job well with all the components that we can control, we can't always control all the components. But if it's been more of a conventional process where we can be proactive in controlling all those components, the ones that we can, then we make sure that the process is cool and calm and seamless and as stress-free as possible. One component of the closing process referenced the mortgage process is often there will be the underwriter is in the entity that's providing your loan. There's the loan officer, which is the one you're typically interfacing with and providing documentation to initially. The underwriter is the person that you'll never meet, who's behind the scenes, kind of on the back end of that loan, and they're analyzing all the numbers and all the nuances of that loan documentation. The underwriter is the one that says, in the end, whether you get the loan or not. That's not your loan officer. So the underwriter is really the final say for whether you obtain a mortgage loan and whether the bank gives the stamp and issues that loan or not in the end. And often underwriters will have some specific, a pay stub from 3 months ago that they didn't get, or a tax form from 3 years ago that they needed that they didn't get. Usually don't go back more than about 2 years for tax purposes. But it's important to be on top of documentation as you approach closing. There are often last-minute documents that they need in order to finish up the loan process. So just be prepared for that. The closing process is also full disclosure, and we want you to understand everything and again, not be surprised or taken off guard by anything during the closing process. So it should be eyes wide open. When it's done right and done through me and my people, it's done with full integrity, full disclosure. So again, there's no surprises and you're going eyes wide open into a process. You know exactly financially what you're getting into and what your payments are going to be and what your financial obligations are going to be, and logistical obligations as well as you own this property, so you're able to maintain it. It'll be sustainable for you and your family over time. The 10th and final thing we'll talk about is future planning. It's good to have a long-term perspective when investing in real estate. And you may be in this house for a couple of years, you may be in it for decades, but either way, when you're buying property, you want to have a long play, 40,000 foot view, long play perspective as you consider where you're going to be, what type of property you purchase. The goal is to maximize your options long term. So we want to make decisions and analyze based on creating options for you, not having restricted options later. So the best and most versatile properties provide options for you to maximize your investment. We want a property to work well for you personally as far as your priorities and goals and needs and living there, and also be a fabulous investment for you to be building equity. And we want to have a good balance of those. It's not helpful if you have a property that works for you personally but is a poor investment. Generally not appropriate. If you have a fabulous property to invest in but doesn't meet your personal needs, then it's not going to be sustainable for you long term. So we're always looking for a great balance of the two of those. Also consider changes in your family. If you are married and or have boyfriend, girlfriend, and you're considering starting a family at some point and having kids, keep that in mind. Say, hey, if we have a few babies and toddlers running around, is this property going to work well for us? So some people have that in mind as they're considering property. Some people kind of forget to consider things like that, like in a condo or townhome that's small in a complex without a yard to play in, and then they get in there and think a year or two later they want to start a family and have children, or even have people visiting. Maybe you're older and maybe you have grandkids. So you think, well, this is great for us, but man, the moment our grandkids come, there's no yard for them to play in. So just keep those things in mind as far as kind of the long play to make sure that it's going to fit your needs. The last thing I'll mention, reference future planning, is that things change. Life changes, life happens, injuries and illness and death happens. It's just real life, and so we can't foresee all of those, but we want to prepare well for those and think outside the box enough to prepare to make sure that you can be sustainable in those situations. So just think of that. Again, high level, 40,000 foot view as far as the right move to purchase property for yourself. So hopefully this has given you a good view. We didn't cover all the components, not even close, but hopefully we covered 10 good helpful topics for you to consider as a first-time home buyer as you're coming forward and considering buying property for the first time. I would love to advocate for you in that, connect with you and answer lots more questions. I'm available all the time to my clients and would love to serve you in that way. So let me know if you have any questions down in the comment box. If you have any other videos that you'd like to see or other topics you'd like to see me address, I would love to hear from you and get suggestions on those. My entire goal is to operate with integrity, to be relational and wholehearted in serving you and provide value on a YouTube channel and not just be like every other realtor. I'm hoping that I'm providing good value to you. So let me know what you think. I'll see you on the next video.